A liter of diesel on an Italian motorway now costs more than €2.70. About half of that is tax. Two different taxes, in fact, and they behave in opposite ways, which turns out to matter more than anything else in this story. The first is fuel duty. It is a fixed amount the state adds to every liter, 67 cents in Italy, and it does not move when the oil price moves. The second is ordinary sales tax, 22%, and a percentage of a bigger number is a bigger number. So here's what happens when a war pushes up the price of crude oil. The fuel gets more expensive and the state's share gets bigger at the same time entirely on its own. Nobody votes on it. Nobody signs anything. It is simply what a percentage does. Italy knows this. 18 years ago, it built a mechanism specifically to hand that extra money back. This year, the mechanism was switched on 3 times and switched off 3 times. The shortest run lasted 12 days, and there is one more detail which tells you how the whole thing is assembled. That 22% is charged on the fuel duty as well, about 15 cents a liter of sales tax levied on money that was already taxed. Here is what has actually happened. Prices at Italian pumps have been climbing since the 3rd of July, the day the last discount on fuel duty expired. Since the 8th of July, Brent crude has risen by roughly a quarter, and this week it passed $100 a barrel. At an ordinary pump, the national average is now about €2 a liter for petrol and about €2.20 for diesel. On the motorway, where you pay for service, diesel has passed the €2.70 we started with. Italy's Small Business Research Office estimates that households and companies will spend around €13.5 billion more on petrol and diesel this year than last. That's an increase of about a fifth in 1 year. The government has said it will step in using something called the mobile excise duty. To see why that keeps not being enough, you have to look at how the price on the pump is actually assembled. Let's build that liter from the bottom. At the bottom is the fuel itself, what the oil costs, refined, shipped, and delivered. That part moves every day, and no government controls it. On top of that sits fuel duty. Some countries call it excise. It works the same way everywhere. It is a fixed number of cents on every liter, whatever the fuel underneath happens to cost. In Italy, it has been 67 cents since the 1st of January, and it is now the same for petrol and for diesel. We will come back to why that changed, because the timing matters. This is also the money that pays for roads, and it is a real part of how the state is funded. Then comes sales tax at 22%. And here's the detail that does the work. The 22% is calculated on the fuel and the duty together, not on the fuel alone. European rules require it. The duty has to sit inside the base that sales tax is charged on in every member state. We are using Italy because its numbers are public, not because Italy does something the others don't. That has 2 separate consequences, and it is worth keeping them apart. The first, 22% of 67 cents is about 15 cents. So the state collects roughly 15 cents a liter of sales tax on its own tax. That 15 cents is there whatever oil costs. It never moves. The second is the one that matters today. The sales tax on the fuel part is a percentage. So when crude goes up, that part goes up with it. The state's total take per liter rises with the oil price automatically without a single decision being taken by anyone. Italy has known about this for a long time. In 2008, it built a mechanism aimed at exactly this problem, and it has a name, the mobile excise duty. Mobile because the duty rate is meant to move down when oil goes up and back again when oil comes down. The idea is elegant. When crude rises, the state collects extra sales tax it never budgeted for. That surplus is used to cut the fuel duty by a matching amount. The windfall goes back to the people it came from, and the price on the pump stays roughly where it was. It was created under a center-left government in 2008 and reformed by a right-wing government in 2023. Both sides of Italian politics have built this thing, which tells you that the problem with it is not a political one. The problem is that it is not really a mechanism. Look at what has to happen before it can work. The finance ministry has to calculate how much extra sales tax actually arrived last month, and that figure isn't ready until after the first week of the month that follows. Then 2 ministries have to sign a decree, and the decree carries an expiry date. Here's what that produced this year. In March, an emergency decree cut the duty by 25 cents a liter, more than the surplus alone would have covered, and it ran for 20 days. In May, a second cut, funded out of April's extra sales tax, ran for 12 days. In June, a third, and that one expired on the 3rd of July. 20 days, 12 days, and under 4 weeks. Not one of them lasted a full month, and since the 3rd of July, there's been no discount at all. So the defect is simple to say. The collecting happens by itself. The giving back requires a signature. There is one more piece to this, and it is the easiest one to miss. On the 1st of January this year, the duty on diesel went up by 4 cents a liter, on top of the 67 we have been talking about. And the duty on petrol came down by the same 4 cents. That is why the two are now identical. The reason had nothing whatever to do with oil prices. For years, diesel had been taxed more lightly than petrol, and the European Union classified that gap as an environmentally harmful subsidy because diesel engines put out more of the fine particles and nitrogen oxides that damage lungs. So Italy agreed to close it. The plan was drawn up in 2025, and the increase was meant to arrive gradually, a fraction of a cent at a time spread over 5 years. Then it was pulled forward into this year's budget, and 5 years' worth of increase landed on a single day. Judged on its own terms, that is a defensible decision. It was taken a year in advance for stated environmental reasons through a process with nothing to do with fuel prices, and it arrived in the same year that the fighting with Iran moved the price of oil. Nobody here made a mistake. The environment people were doing environmental policy. The tax people were doing tax policy. What nobody had anywhere in the process was a room where the two decisions were added together, and someone looked at the total. So what would it look like if giving the money back were as automatic as taking it? 3 designs, and none of them is free. The first is the obvious one. Make the giving back a rule instead of a decision. Write the formula into the law itself. If sales tax revenue comes in above what the budget assumed, the duty falls automatically. No minister signing anything. No expiry date. That costs 3 things. The Treasury loses control of money it has usually already promised to something else. It also stops knowing what it will collect. A budget written in October would depend on where the oil price goes in March, and there is a third cost that cuts against Italy's own stated goals. High fuel prices are the one thing that reliably makes people drive less, and this design would soften them automatically every time, exactly when they would have worked. Remember that this is the same country that raised the duty on diesel this year to clean the air. The second design goes after the base rather than the speed. Stop charging sales tax on the fuel duty. Calculate the 22% on the fuel alone, and that 15 cents a liter disappears. The cost arrives in 2 parts. 15 cents on every liter sold in the country permanently is a large hole in the budget that has to be filled from some other tax, and Italy cannot make this decision anyway. The rule that fuel duty sits inside the sales tax base is written into European law and applies to every member state. So this is not something an Italian government can vote for. It is a European negotiation measured in years. The third design already exists, and it has been running for 12 years. In 2014, Chile passed a law creating a fuel price stabilization mechanism. The finance ministry regularly works out an extra amount and adds it to the fuel duty. Some cycles it adds, some cycles it subtracts, and some cycles it is 0. Nobody has to sign it, and it never expires. This is the first design finished and operating, and because it is real, we can watch what it costs in this same oil shock. Since the fighting with Iran began, Chile has spent about $220 million holding its pump prices still. $140 million of that went in a single week in March. Then the government pulled an emergency lever written into the same law because the budget could not carry it any longer. Overnight, petrol went up 32% and diesel went up 62%. The president's approval fell 6 points in a week, and the truckers began organizing. There is a quieter problem too. Crude moves every day, and the formula only recalculates on its cycle, so a jump the day after a recalculation doesn't reach drivers for another 2 weeks. The lesson is not that automation failed. It is that automation doesn't remove the cost of a shock. It moves that cost out of the household and into the budget and stores it there until the budget says no, and then it arrives all at once. So go back to that liter of diesel. About half of it is tax, and a slice of that is sales tax charged on tax. None of this is hidden, and none of it is an accident. Every piece was built deliberately by people with reasons they could defend. The duty pays for roads, the shape of the sales tax base is written into European law, and the change to diesel was made to clean the air. What is lopsided isn't the money. It is the speed. One side of this arrangement runs entirely by itself. Oil goes up, and the state's share goes up with it in real time, attended by nobody. The other side needs a ministry to finish its arithmetic, 2 signatures, and a fresh decision every single month. And then it expires. So the question worth carrying out of this isn't whether fuel should be taxed. It is who decides and how quickly when a tax grows on its own because a war moved a price somewhere else. A minister with a decree each month or a formula that nobody has to sign. One of those answers is late. The other one is expensive. There is no third answer that is neither late nor expensive.